Many nonprofit leaders wonder if their tax-exempt status will expire or need renewal. The good news is that 501c3 status is generally permanent, but there are important compliance requirements to maintain it. 501c3 is a federal tax-exempt designation that allows qualifying nonprofit organizations to operate without paying federal income taxes. This status also enables donors to make tax-deductible contributions to the organization, making it highly valuable for charities, educational institutions, and religious organizations. Once the Internal Revenue Service grants 501c3 status, it does not expire and does not require renewal. This means that after going through the often lengthy application process, organizations can maintain their tax-exempt status indefinitely. However, this permanence comes with ongoing responsibilities. To maintain tax-exempt status, organizations must file annual reports with the IRS using Form 990. Depending on the size of the organization, this might be Form 990N for small organizations, Form 990EZ for mid-sized groups, or the full Form 990 for larger nonprofits. These annual filings are not renewals of the tax-exempt status, but rather confirmations that the organization continues to operate in compliance with tax-exempt requirements. Failure to file the required Form 990 for 3 consecutive years results in automatic revocation of tax-exempt status. This is perhaps the most common way organizations lose their 501c3 designation. The IRS implemented this rule in 2006, creating a more stringent compliance environment for nonprofits. Beyond annual filings, organizations must continue operating exclusively for their exempt purposes. This means avoiding activities that benefit private interests, refraining from excessive lobbying, and not participating in political campaigns. Proper record-keeping of income, expenditures, and organizational governance is also essential for maintaining compliance. While federal tax-exempt status does not require renewal, state-level requirements vary significantly. Some states require periodic renewals for state tax exemption, corporate registration, or charitable solicitation permits. Organizations should check with their state's revenue department and charity offices to ensure they remain in good standing at all levels. If a nonprofit loses its tax-exempt status due to noncompliance, all is not lost. Reinstatement is possible by filing a new application using Form 1023 or 1023EZ, depending on eligibility. Organizations that act within 15 months of revocation may qualify for streamlined retroactive reinstatement, which restores the tax-exempt status as if it had never been revoked. For organizations that miss this window, reinstatement typically takes effect from the date the new application is approved. This gap in tax-exempt status can have significant financial implications, including tax liability and the inability to offer tax deductions to donors during the lapsed period. The effective date of tax exemption also matters for new nonprofits. Organizations that apply within 27 months of formation can receive tax-exempt status retroactive to their formation date, provided they have complied with all requirements, including filing Form 990 if applicable. Maintaining 501c3 status requires vigilance and attention to detail. Organizations should establish systems for timely filings, regular compliance reviews, and proper documentation of activities and finances. Many nonprofits designate a specific board member or staff person to oversee compliance matters or engage professional assistance to ensure requirements are met. 501c3 status offers valuable benefits to qualifying organizations, from tax savings to enhanced fundraising capabilities. While this status does not expire or require renewal at the federal level, it demands ongoing compliance with IRS regulations and state requirements. By understanding these obligations and implementing proper procedures, nonprofit organizations can enjoy the benefits of tax-exempt status for their entire operational lifetime.